Hey, good morning, everyone. Great to see you all today. Welcome to the PivotBoss Premium Trading Room. It is August 25th, 2016, and we're taking a look here really quickly at crude oil. We're about 32 minutes into RTH. One thing I typed into the chat a little bit earlier is that crude oil is doing that whipsaw behavior that it did just before it rallied big the other day. Remember, right in here, we recall that we were getting some huge shakeouts. Very deep shakeouts, and that's when I said usually when that happens, a major move is coming. And this is what I meant, kind of this pattern here where, price would go down, then it'd go up, and boom, shake out almost all the way down. Then it'd go up, boom, shake out again. Then it'd go up, then boom. These deep shakeouts usually occur before some sort of significant move. It's almost like that rodeo, right, where the bull is trying to knock the cowboy off before it can take off. And so right now we're kind of seeing some of that play out at the moment. You see a move up and you see a deep shakeout, move up, deep shakeout, move up, deep shakeout, right? So these are some deep shakeouts. Additionally, if you take a look at this thing, kind of zoom out a little bit, you'll notice a big move down here and then a bounce and then it did its thing and then it shook out right here on the right side before it took off, forming a clear range in the process. This is the same behavior we have here. Then you get up here, trading range, and down here on this right side, you're doing the shakeout dance with a clear trading range. It looks very similar to what's already happened. And so right now, it's just something to look for. I mean, I'm very, very big in the repetitions of the market. Oftentimes, it'll create these signatures in brief moments, but during those brief moments, they're highly reliable signatures. So just something to keep in mind over here. Right now, this is the lows, right? And we got below those lows and failed and then made it support, and now we've had higher lows here off of this right side. That's usually absorption. All late bears down here have a shot at getting their stops run, and that's what could spark a big time rally here. And that's the exact same behavior we saw over here, right? There's a low. Here it went below it. Here it sealed it. Then it was higher lows, and eventually chop led to a move higher. I mean, it's almost exactly the same. So that doesn't mean it will happen. It just means that's what's happening right now. We have to look for cues that will support that theory, right? We create a theory for what we think the market could do, and then we just look for the market to either prove or disprove that theory. And in this case right now, a lot of deep pullbacks, a lot of shakeout legs either way. To me, that usually means a big move's coming. Now we just got to be right on direction or let it prove the direction to us, and then we get in from there. So this is one to watch out here. Obviously, we've sold off quite a bit here. And now what makes this area even more important is if you look this way, this 46.59, which was a target on our way down, right? We were targeting this zone as a primary target yesterday, in addition to a couple of more things that were there. I think 52 or something like that might have been an ADR target, but this was the zone we were looking for when this thing started going lower, right? And that's what I mentioned yesterday is that, hey, we can put big time targets down there on the bottom all we want, but we won't be taking any profits off the table down there if price doesn't get there. So you have to be able to identify targets that are most likely to be reached that will both maximize your gain and also have a higher probability odds of being reached. Because we could get long here and say, hey, my target's way up here, but is that too far? Or should we look for something here once this thing starts to squeeze? So you have to be able to it's always a balancing act. And that's why I look for the biggest confluence of events, and that's what we looked at yesterday. Why we choose that level is because it was the bottom of the key range. Over here, it failed to hold above the midpoint of the key range. That's why we identified the bottom. Additionally, there were other key factors there that helped us identify that. We had S3 on the PivotBoss bands was right around that area. So we had a nice confluence of key levels. Now we're right back at that low though, right? See, these bears tried to hold it below and failed here, so then they come and get absorbed here and kind of pushes higher. Then down here again, You know, every push below this level right now being defended. So this is a big time level right now, and we know that if the market fails to hold outside of this low, the odds increase for a move back to the center of the range, followed by the potential to see a move across the range into 48.32, which is the top of the key range. So right now we have a very nice key range to play off of. If 46.50 can't be held here, you likely run the stops, and we have two major targets down below, 46.15, 45.91, 45.88, that zone. This pink band right here denotes two different composite VPOCs. This one is the 1-year composite, and this is the 2-year composite VPOC. And that makes for a big time high probability target to reach when you can't go any higher up here. Usually you come back to wherever prior value was, and this is significant value. So, you know, this doesn't seem done to me until it hits here, but at the same time, nothing says it has to hit this price. So we'll continue to watch this. I think the way it's looking right now, it's setting up for a potential squeeze here, but any failure to hold above 46.50 right away starts to negate that, and you could see the next run right on down to these targets easily. The next thing we can do real quickly here is just add our intraday style. We'll make these ADR targets bear targets. There we go. So from this high of the day, if it were to break through 46.50, right, from that high of the day, and then it's trying to hold, but fails right here, when the stops come out, the highest probability target's right here at 45.91. That's your 75% target. This one right here is your 50%. This is your 100%, and this is your 125%. Look at how these ADR targets also coincide with the previous day's price extension. So this is the S1, S2, S3, S4 PivotBoss pivots. And that's your 25, 50, 75, and 100% expansion from the previous session's range. But you can see how nice the confluence is. 45.91 has been a big time level for us because that's a key level low, right? It's the key level from the low of the key range from before, higher time frame. And so 45.91 we know is an important level. So right now, if this thing were to break 46.50, 45.91 to 45.88 I think is the best target down. Obviously this one right here would be a scaling point, or wherever that would be. But so right now we have a little bit of an idea developing here. We'll see. Does it usually happen overnight, Max? Are you talking about the impulse move, the overnight impulse move of the crude oil chart? This one here did. Oh, the whipsaw. No, I think the whipsaw is. I don't think that's generally. I think it can just happen whenever. Yesterday it happened after RTH started, and today it began around 6. RTH started probably about right here or here, so it's halfway in there. But yeah, it can happen anytime, I think. We'll see how this one plays out. But the clear thing is, you know, you got bulls here, bulls here, bulls here, bulls here, bulls, bulls, bulls. And that all of their sell stops are right here. So it's going to be a very easy no right now to say, okay, hey, this thing isn't holding 46.50 anymore. And everybody that's been holding in this thing since will likely give it up. So it's got to hold this level right here. And if it does break, you know, it's kind of Mark Fisher's point, which is just because price breaks a level doesn't mean it breaks a level. It's about how much time and acceptance it can trade beyond that level. So you can see right over here, for example, support, support, support. It broke through the level, but it didn't spend much time there before it squeezed big, right? And so, you know, just because it peaks down below for a second doesn't mean it breaks. So, you know, it's all about the nuances there. Are you talking about this one right here, Scott? Yeah, I saw that one, people asking about it on Twitter as well. Like a huge huge buy imbalance or something comes in at that level or around that zone, and the thing just surged up. I think it was Nanex that may have tweeted something, but that was huge. I didn't see it live at the time, but man, what a move. I saw and read about it later. That's unbelievable. The RTH for crude oil is 8 a.m. to 1:30 p.m. Central Time. Central. So it's 9 to 2:30 Eastern. Yesterday went right to VWAP. Yep, look at that. Right to it. And this is actually a pretty good absorption signature down here. If you take a look at the mechanics of this right here, it is actually really beautiful. It's really, really beautiful. You have a low, it drops down, and that low right there is where they make a resistance. They drop it again, they come up, they make a resistance, and right here, they fail to get a new low. And we talk about the change of bias, and we talk about the algos and how they change bias. The algos change bias right here on this rejection. And at this point is when they make the determination that we're gunning for this. That's how quickly they do it, because they're doing it based off of rejection. This is an auction. So when price drops to this low and pulls back, you know, and you're supposed to defend it, when it makes that next pass down, that's why I say there's a little band here. There's the actual low, the level, which is this level, and then there's a little bit above it and a little bit below it, because you can reject on a higher low, you can reject on a double bottom, or you can reject down here on a failed new low. Any one of those three, that's what they're looking for, the algos. So you have to be on guard. And so many times the best scalpers are always looking to play this one, not necessarily having to get this one all the time. You know, that's the low now. Now you're playing this off of a pivot low. The reason why we're using this low, or this low as opposed to some of the others, is just because now we're beyond a key level here, 46.50. We're beyond a key level. This is the key level low. So anytime you get failed range expansion, we want to know about it. You see this low right back here? We're below it. That's why it makes that area important. And if you are beyond the previous day's low and you cannot get further acceptance, you form a box and you see a reversal. That's the box reversal right there. The other thing is, once price pushes, here's where the stops come out. They push up. Where the stops come out is where the bulls then begin to absorb. And this is an absorption signature. And look, here's the previous support, then it forms it down here. So that's the zone, and then they squeeze it right back up to VWAP. VWAP is where they take it off the table, and then it just comes all the way back. But this right here, this mechanics of the way it looks, is what you can look for in every time frame. It's not always this perfect. It's not always, you know, some things change, but look at it. That's very, very nice. And right now you're starting to see the squeeze come out that we were anticipating. Very nice squeeze so far. We were anticipating this being the absorption point. So the primary idea was that it would squeeze. This target up here, 47.08, is the recent pivot high. That's usually the first major target. And from there you could perhaps pull back and then gun for the upper area. So right now, you've got a nice squeeze here. Just say from the absorption point of, say, 46.55, it's about 40 ticks up. We're at 46.95. So about 40 ticks up from, say, this absorption point, right? So every rotation into that zone gave plenty of space. Boom. Very nice move very quickly. You take VWAP bid right through the level, have never come back to it yet. You're taking value bid, this value bid. A lot of key levels going bid right now. So here's the squeeze. Yeah. Good one there, JP. Absolutely. Wow. That's nice. There's a footprint. So here's the footprint chart that JP just posted. You can see here, I always love this. Right in here, you get the initial burst up, and then right in here are sell imbalances that come in. And those sell imbalances immediately get eaten up. You can see the green stripe right there, immediately eaten up, and those lead to a buy covering spree right there. So there's a short covering, all those buys come out. Look at all the buys come out until you get back to value, the last buys come out, and yet price goes offered. That's nice. Thanks for sharing that, JP. That's nice. No, this is actually an MD chart, market delta. All right, so we're seeing a little bit of a squeeze here. Here's the next pivot high. That's going to be very important. This is the level that I mentioned pre-market. Now, the struggle occurs right here. Because if it can get through this level, you know, you're just walking up key levels now. 47.7 is the next one above that. And then the last one would be about 48.20. The other key level here is the previous session's close right here. That's the white dotted line. Chopped around it, took it offered, then it tried to make it resistance, and now the stops came out above that level. So this 46.80 is very important. We're still walking our way up to 47.10, the first major target. Should this thing come back like this, the area to defend would be right here for an attempt to squeeze even further up. So right now, very nice squeeze underway for crude oil. 50 ticks from the 46.55s up to 47.05. And now you're starting to see a nice little pullback again off of this zone. You come into these highs, right? This is where they start to take some off the table. You'll see a little bit of a pullback. But then anybody that comes in up here, short, bulls will want to come in and defend from behind in order to squeeze and try to get it to the next leg up. So again, this is part of just visualizing what trade could come, and then as that thing starts to play out, understanding where you'd like to enter and exit, those types of things. We obviously knew the absorption was here, so pick a spot. Pick a spot down here. Once price gets going, obviously I like to do my plus 10. So as soon as it goes 10 ticks in your favor, scale half. And then you start picking off where the next important levels are. So after I get a T1 and get out of scale half so I can get to break even, the next one is based off of a key target zone. You know, is it VWAP I'm shooting for? Is it a next pivot? Is it a key level? Something, the next major zone. Since we took VWAP bid right here, the next major level up was right here. That's what we said. So you should be looking for something up here. So ideally, you know, say you scaled somewhere in here after the first bump up. Ideally, you want to scale ahead of the next pullback. Why scale down here when you could have scaled up here? So typically speaking, you'd like to scale within a couple of ticks of that next key level. Remember, I like to front run by a couple of ticks every once in a while, right? So here's this high, and it's about 2 ticks off the low. Off that high, rather. So, I mean, you want to scale somewhere in this up thrust here, scale near the pivot, and then when price comes back, now you've already scaled 3 or 4 units perhaps, because the first scale was a half, the next one was a fourth, and your last one's a fourth. But by scaling like this, you've taken out profits along the way, but more importantly, you've reduced your risk. Because after the first scale, and you take half off the table and make a plus 10, that minus 10 that you were holding as a stop, if you hit that stop now, you've lost $0. It's a break-even trade. So this first one, this first half pays your insurance, right? That's insurance for the trade. The second one up here makes you some money as well, and now you've made money on 3 of 4 of those units. So now you have 3 of 4 units that are on the sideline. You only got 1 of 4 units that are at play. So now you have flexibility, because now you've hit your first 2 targets. So your flexibility says, okay, now on this next pullback, if I start to see signs that this thing may hold, I can add back a fourth. Or maybe you say, you know what, this is the most important level right here, is 46.80 into value, which is VWAP and VPOC. I'm going to wait for price to get here, and then I'm going to look to put half back on it, right? So you can do that if you like. You don't have to add back. Always my number 1 rule on the add back is, if you add back to a trade, that add back cannot take your profitable trade to a loser. So you always have to constantly do that math, that if you're adding back, if that result turns out to be negative, you have to either have a break-even trade or better. You cannot have a losing result. So losers add back to losers, winners add back to winners. So usually after a scale or 2 scales or whatever, that's when I'll start looking to add back if I believe the move is going to continue. Right now we're not seeing any rejection just yet. It's just pulling back nicely. But again, that's why you want to take off that next scale ahead of the target, right at the target, right? Don't start the scale, say, okay, now I'll take another quarter off right here. I mean, because you just gave back quite a bit of money. Here's the footprint chart that JP just posted. Thank you, by the way. This one right here, you can see every rotation down, you see the red. Every rotation down, you see the red. So this is the absorption point. So 55s are probably somewhere like right here. And so every time price was getting at or below it, you can see all those red cells right there tell you that a lot of sellers were coming in at the market. They were selling at the market, selling at the market, selling at the market right here. Yet price wasn't going down. Instead, price pushed up despite all of those sellers. That tells you that you have larger passive buyers down here using limit orders, limit to buy. So every time somebody sells at the market, this limit with the buy is taking it from them. But if they're selling, you know, if you add these up, say they're selling 500 here, this limit order may be to buy 5,000, right? So every time it comes down here, it transacts a little bit, transacts a little bit, you know, whatever the case may be. So the bigger fish is going to win, usually. That's why absorption is so important, and that's what happened here. And then you can see here it turned red, it pops up, then it comes back, and boom, right there, red. But that red led to strength because it closed up here, and you can see again more red comes in and more pushing through. So this is just trap sellers. Trap sellers become buyers. Trap sellers become buyers. Because if you recall, you come into the market as a seller, right? This red right here tells you that someone got in as a seller. They sold those, and yet price went up. Because once you enter the market as a seller, you leave the market as a buyer. You're either buying down here for a profit, or you're buying up here for a loss. You're buying to cover. These are the short covering rally because everyone's starting to cover their loss on their shorts. So that right there is kind of the mechanics of how it plays out. So you can just see when we're talking about that absorption, we're saying, look, they're absorbing here, they're absorbing here, they're absorbing 46.50, 46.50. If it breaks that level, then it's done. But every time it came into that zone, these sell imbalances told you that was evidence of absorption. And then here's the move that we were believing could happen, and that's how it's played out. So that's really cool to see that again. Footprint chart's one of the best ways to be able to see inside the charts. And right now, while I've been away, here's the pullback, and then you start to see some of the strength come out. And now you're seeing the next leg up. So again, you can see if you're stalking that pullback and you think, wow, that's a great move and I think we still have more upside, you could have added back a quarter to this trade, or added back a half, or added back all 3/4 of the trade, and now you have a full position, right? Now you have a full position. So just say you added back a half. Say you added back a half, say right here. It came down, it bounced, then it came down and bounced off that low, and you say, okay, I'm in right here, and I add back a half. Whenever I add back, ideally, right, if you're in a trending market, that's when I do the adds, because I'm trying to add on this pullback ahead of the bounce. Then I try to add on this pullback ahead of the bounce, right? So here's your first move, here's the pullback, and then here's your rally. On an add back, I typically, on this move right here, I'll go ahead and take that add back right off and just scalp that move from here to here. And now I've just made an extra 30 ticks on half that position. And now you're back to the original quarter. But you're also back to a point where you could add back again if you wanted to. So now you take the recent high, you take where the stops came out here, and that becomes your target zone. So now you're looking at this and you're saying, okay, if this thing gets over here, I'm going to look to enter here and I'm going to add back another half or add back another quarter and try to ride the next wave up. Meanwhile, you still have 1/4 on the trade from down here somewhere around 55s. And so you've made, 70 ticks on that so far. So that's how you can maximize how much money you make on one move, instead of trying to hit the home run and trying to get it to go, over the wall, right? This is just one move, but you milked it in many different ways depending upon how actively you engaged it. And I call that active trade management. That's active trade management. I think that is one of the hardest things to do for traders at times. It takes practice. It takes just being in there, and I think that's where the video game approach comes from. I mean, if you can just practice that video game simulation over and over and over until your fingers are moving at lightning speed and you have no clue what buttons are being touched, but you're doing the right things because it's just muscle memory. So it's understanding the right pace and tempo is one of the things. Because this technique is hard because not every market is tailored to be able to use that technique. You can't use it here and you can't use it there. It's on those moves where the market is moving and you think there's going to be additional waves of movement, that's when you can do this. Other than that, if you try to employ that approach, the market is not usually conducive to it. So it won't always work right. So that's why it becomes hard. Most of it is more about understanding when to apply it and how to apply it. Now, in terms of the scaling 10 ticks, Max, I always use 10 ticks for the most part. That's my go-to on just to get the T1 target. Because remember, if you can just get to T1 and get that first target, now you're a break-even trade. So price can come all the way to your original stop, and it doesn't matter as long as you hit T1 first. So I'm most stressful, if you want to call it stressful, at the very beginning of the trade as it's working toward T1. Because once you get T1, you know you're in the clear. You're home free. It could just turn around and go right down to zero, and it doesn't matter because your stop is there and you got out break even. So T1s are where it's at. So I try to make a T1 as close as possible. I don't want to make it 2 ticks and whatever, but 10 ticks is good. If it's a super slow market, 8 ticks, 15 or 20 ticks if it's a faster market. 15 ticks is a good one. 20 ticks. Sometimes I don't want to trade unless I can at least get 20 ticks on the first target. So, sometimes it just all depends. But 10 ticks is usually a good one, especially for most anyone. It's just 10 ticks is a good one. And so if you can just get 10 ticks here. After that, every scale is just whatever makes sense in the chart, in the auction. Usually I'm looking toward rejection points or trading back to value levels or trading to a PivotBoss ADR target, whatever that may be. But the first one is usually 10 ticks. After that, it's open. Remember some of these daily bar techniques that we've been talking about on entries? That's what I love about trading, especially with these bars. I mean, if I took away the time and the date and all that and the price, you wouldn't know if this was a daily bar chart or a 1-minute chart or a tick chart. This could look like a great daily bar chart where you have a doji form here. You have a rejection at that low. And then you have kind of what's almost an outside day here where price goes bid through the previous high right here. So on this day, remember we look for pullbacks. You look to defend right into that previous high. So into that level, and you can see price came right into it, and then that's a takeoff. These are the same entry techniques that you can use on a scalp. If you're trying to talk about, hey, am I going to get in and add back a quarter here? Where do I do it? Where do I do it? How do I know? How do I know? You can use the same type of techniques that we see all the time in the daily charts or any time frame. This right here was actually those levels right there is actually the pivot range. So it came off the pivot range and just rallied through. But so many different ways. Right now we just hit the R3 pivot. So that's the R3 PivotBoss pivot, or PivotBoss band. And that is 3 standard deviations above VWAP. And so we're right there at that level. Typically speaking, this could be an area where the market begins to fade some. If this market's going to remain bullish, then it's going to have to pop above it, through it, and then keep it as support, right? So now we know what the market has to do in order to continue looking bullish. That doesn't mean we can't test these prices above it. So this is going to be very important. We're at 47.25 right now. That's a key level as well. We're starting to see a little bit of a pullback here. But a nice rally so far. I do tend to believe that this rally can continue higher the rest of this morning, but we could see some pullbacks first. So right now we push through these highs right here. This area should need to remain defended. Anywhere from 47 to 47.10 in order to see that next wave up. The next wave up should take us at around 47.70. Really great stuff here in crude oil. Great rally based off of our pattern recognition.